Just days after massive job cuts at San Francisco-based Twitter, Facebook parent company Meta is reportedly planning large-scale layoffs. Those could come down as soon as Wednesday. NBC Bay Area's Marianne Favreau takes a closer look at why the company may be slashing jobs.
Meta, the social media giant based in Menlo Park, is poised to lay off thousands of employees this week, according to the Wall Street Journal.
I warned you guys of this. I've been talking about it for an extended period of time, and now what you're going to start seeing is a flood in the market of a lot of different people that are overly qualified, which means that they're coming for your job in the market. And so Twitter, Elon Musk has already started, or he has already executed his mass layoff. And guess what? The value of Twitter is actually going up because they're having record revenue. People want to actually do business with them. And so what I'm seeing now is that these technology companies are starting to become legacy businesses. And so in these legacy businesses, ultimately they need to be revamped and reformed the same way that auto manufacturers at one point was legacy businesses, and then they transition over into technology companies. And so these companies have been around for an extended period of time. But let's continue.
Would be the first major cuts in the company's 18-year history. Last month, Meta CEO Mark Zuckerberg hinted at the layoffs during an earnings call when he said, quote, "In 2023, we're going to focus our investments on a small number of high-priority growth areas. That means some teams will grow meaningfully, but most other teams will stay flat or shrink over the next year."
Let me tell you what that means. It means that we want to make the long-term capital investments because they're not going away from investing in the metaverse. And the metaverse is costing them billions, tens of billions of dollars every year. And so Facebook is actually making a smart decision for investors. I know a lot of us like to think about it from the little guy's perspective as far as the actual worker's perspective. But once you get to a certain point in life, you start to see that the survival of the company largely depends on making strong leadership decisions. And those leadership decisions in this particular instance is to get away from, and let me emphasize this one more time, get away from the thing that is dragging on revenue, because Facebook, now Meta, is a publicly traded company. Let me emphasize that one more time. Meta is a publicly traded company. It's not a private company. It is not based off of, and the same thing would apply with a private company, but when you start to face pressure from investors in order to make sure that you shore up the books, meaning that you need to cut costs, dedicate the majority of your resources and all of your workers towards a specific demographic or a specific segment of the business as far as the growth areas, the thing that actually make you the most money, make the transition for the long term, and also be focused on the thing that you think is going to be the best for the company as far as being first and creating the best user experience long-term for the metaverse. If that's what you believe that the future of technology is, you have to balance all of those things while also remaining profitable and satisfying investors. But let's continue.
Analyst Tim Beharin says one problem is Zuckerberg invested $10 billion in the metaverse concept, which is still in its early stages and not bringing in major revenue.
I think he's realized that his broader vision is just not going to pay off in the short term. And he's going to have to regroup in the context of what projects he's going to put money into.
That's not the problem. And this is the problem with these analysts, is that they don't know what they're talking about. The problem is that he did not strategically, slowly transition into this concept. He completely renamed the company that, which we all know that investors are short-term in most instances. And if they don't see the vision, even if you do, then they will put pressure on you to make sure that you shore up the finances so that you can then satisfy the shareholders. That's just a fact. But you have these analysts that have short-term thinking, and Mark Zuckerberg never expected to actually make a profit. Think about it. The foundation of most technology companies, including Uber and Tesla and Facebook and Twitter and Instagram and all of these other companies, is that when they came into the industry, they weren't making money. As a matter of fact, they weren't even running ads. Let me say that again. They were focused on the growth of the company, not necessarily making money, because making money and monetizing a platform was easy. Now that they're actually making money and they're a publicly traded company and you're facing more pressure from shareholders, the actual bottom line is more important than the long-term strategic investments in certain areas of the business, whether or not the investors see the vision or not. And so a CEO, and this is the thing that I try to tell people, has to balance multiple hats. They have to satisfy the overall sentiment and the shareholders of the company while also making the capital investments that they think is long-term going to be best for the future. And it's a delicate balance. You have to be a salesman and an engineer at the same time. You have to be able to see the vision for the company while also satisfying shareholders. And people don't understand what executive leadership is. It's steering the company in the right direction while also being a very, very, very great salesperson.
And that will bring money into the company faster.
Earnings are bleak. Meta is the worst performer in the S&P 500 this year, with shares down roughly 73% over the past year.
And now that they're making these strategic investments, I'll plow even more money into it. And see, I'm a long-term guy. I'll look 10 and 15 years down the line. I don't necessarily care about what's going on today because that has no bearing on whether or not, in my opinion, a company is going to be successful. And so I long-term make strategic investments. I think that he's doing the right thing, satisfying the shareholders now so you can prop up the stock price, in which the performance, obviously, they're talking about the pricing and not necessarily the profitability of the company. Even though share profitability is a little bit down, they're solidly profitable and will be for the foreseeable future. But Meta has to go through a transition period in which they can't completely lean on Facebook. They can't completely lean on Instagram, especially being a platform by which people have to download it from iOS, with all of the restrictions that Apple is now giving people as far as being able to opt out sharing certain information so that they can't actually be able to track certain things so that they can market themselves and make more money. They have to go through a transition period, and this is that time. And it comes at a time in which we're facing recessions and inflation and all of this other type of stuff, but they'll be okay. They'll be fine.
San Jose State tech expert Professor Ahmed Banafa says recent changes at Apple also impacted Meta's bottom line.
When Apple instated this kind of monitoring on their new operating system that will tell you if Facebook is following you, would like Facebook to follow you or not. That
of course they're following you. They have to follow you in order to be able to market to you effectively. So if I run a Facebook ad, for example, I want to run a targeted ad, and I want to run that targeted ad based off of whatever type of business that I have. So for example, if I have a restaurant, I'm not looking to market to somebody in San Francisco. If I'm here in Michigan, right? I want to market to people within a 5-mile radius that actually want to come to the restaurant, create more familiarity and target my ad dollars to people that will more likely spend and patronize my business. And so they have to learn more information about you. They want to know how old you are. They want to know, what your spending habits are, where you are, where your interests are, what you're more likely to do, so that they can then create a better experience for the advertisers that's on that particular platform. And I'm not opposed to that at all. I think that that's actually a good thing, but I'm a capitalist, so it's a little bit different for me.
Trimmed a lot of their income from advertising.
The expected layoffs at Meta come just days after Twitter laid off roughly half of its 7,500 workers, including nearly 900 employees in the Bay Area.
Yep.
There's a big picture here, which is all the tech companies are preparing for the worst. They know that inflation is a big problem. They anticipate there will be some kind of a recession in 2023. A lot of uncertainty about the elections 2 days from now. They want to see which direction the Congress will go.
For the Bay Area tech sector, the anticipated Meta layoffs are yet another concerning question mark about the future. Marianne Favreau, NBC Bay Area News.
It's over for a lot of these people as far as these easy rides, and that's why I keep telling people to make the long-term investment in yourself so that you can then benefit from it. And you don't find yourself in a space to where you're completely blindsided. You need to not diversify your skill set, but making sure that you're making informed decisions to where when things are great, you're positioning yourself for the best possible outcome versus putting yourself in a position to where you will then be facing layoffs, because we did that in 2008. And so why would I go through it again instead of being a little bit more strategic in how it is that I'm moving? But again, I want to know what your thoughts are. Anton from AntonDaniels.com. I appreciate you. I love you. Thank you for continuing to tap in with me. I need you to do me one more favor before we get up out of here. Make sure that you subscribe to the Patreon. Link is in the description as well as pinned to the top of the chat. I actually just dropped a video inside of the Patreon that gives you the update on the New Year's Eve. Updates, upcoming videos. Got the Charleston White video in there. About to drop the Lamar Odom video in there. We doing the build the business, and then again, more importantly, we have the Patreon meetup in Miami for New Year's Eve. It's going to be absolutely awesome. You guys go and check that out. I love you. I appreciate you. Share this with a friend, and I'm gonna talk to you later. Peace.